take it straight then to the management that is joining us now. Allcargo Logistics, that's the stock that we're tracking today, doing well in today's trading session. That's on the back of a strong set of earnings. It's come on a weak base, but at the same time, the company's also added a fair amount of business to themselves through joint ventures as well as acquisitions. It's been led through their core operations, which is the multimodal transport business, and there's been a sharp expansion in margins there too. What's aided the performance and what's the outlook from here? We have the chairman of the company, V.S. Parthasarathy, joining us. Thanks a lot, Mr. Parthasarathy, for joining in. It's been a good quarter. The multimodal business did revenues of over 5,000 odd crore rupees. And that exactly is the question to you. You know, this 5,000 crore rupee quarterly run rate, is this sustainable from here? I ask this because a few years ago in FY17, your overall revenues were just around 5,000 crores. Last year, they crossed that 20,000 crore mark after crossing 10,000 crore in the previous year. Going forward from now, in the multimodal business, is 5,000 per quarter sustainable run rate?
Yeah, thank you. Thank you for the compliments and a good number. So when you have 20,000 crores at the year annual revenue, which is almost double of what it was last year, a 2x growth. So it does call for a very, very robust growth. They say one swallow doesn't make a summer, but when you have 4 quarters in which you've grown in similar nature, then it does make the the nesting process a permanent one or a complete transition. So I think the the growth what we have achieved is not only sustainable, but we can grow. Just to give a perspective that it's not only a 1 quarter growth or once in the thing. So the last 3 or 4 years, our CAGR growth is about 35%. So that also.
Yeah, Mr. Parthasarathy, we understand that, a swallow doesn't a summer make, and the last 4 quarters have been doing well. 5,000 crore is sustainable from here on. And you said you can even grow beyond that. So purely from an MTO standpoint, are you likely to see 35% growth even on that base in FY23? And what happens to the margins? Do they sustain at that 7.5–8% level?
Yeah, two points. So what we have done is twofold. First, your question about can we grow 35%, and if the condition and our initiative, all of them come together, why not? I don't want to predict the future because it will be giving guidance, and I don't want to do that. But we have put all factors which enable us to grow. Our international expansions have given us robust growth in the international market like US, etc. And we have got growth in the MTO business even in the domestic company. So all cylinders are doing. Our digital is coming in home to also fire on. So that it can be. And as far as the EBITDA margin is concerned, there are 3. One is digital is enabling us to kind of not have the kind of cost associated in future. So that should help. The second thing is that whatever initiatives that we have taken on the expansion of sales, etc., have proven well, and that should also augur well, both from a margin perspective and a revenue growth perspective.
Mr. Parthasarathy,
so in a nutshell, we have all the
we want to crack that a little bit more now. Let's try to get a little bit. As you said, you don't want to give us a fixed guidance, but you could give us a broad range. So the MTO business that you're saying has been growing at a CAGR of more than 30% in the last few years or so. What are the range you're looking at? Is it 10 to 20 or 20 to 30 for the coming year?
Yeah, so ummeed pe duniya kaayam hai. So I'll always not going to tell you the lower end. I'm going to tell you the highest end. But what I can just tell you is all the elements are in place to capture whatever benefits which we can, and our acquisitions has given us more impetus. So I'll leave it at that.
So the pitch is set. Now it's ready for you to hit it out of the park. I'll put it in that manner. What about margins? We are talking about blended margins. Your various segments have various margins. You have various drivers as well that will play out. But on a blended basis, we are looking at your last quarter. You did around 7.5% margins. So from here, what should the margin look like? And for last year on the whole as well, you did 7.5%. Now, if you're not going to give me a fixed number, at least tell me, will it be better or will it be worse from here? Go ahead.
So basically what we have done has impacted us for part of the year last year. So we have got headroom for a full year impact of all those initiatives that we have taken. There could be some headwinds, but even after taking the headwinds, we have lot of initiatives which kind of going. So I don't want to, like you said, give a fixed number, but if anything, as a CFO, I would say that the 50% ROC that I've got this year, I would like to maintain that momentum being a world-class figure of 50% ROC, and that's what I would want to push the organization on, and I would want to focus on.
50% ROCE is what you're looking at. Mr. Parthasarathy, with the kind of growth that you have, I also think that you've had some poetry for breakfast, because you're talking about swallows making summer and you're talking about Ummeed Pe Duniya Kayam, etc. Let's talk about the fleet addition, capex plans that you have, because to sustain this kind of growth, you also need to invest in capacities, etc. So what's your capex plan going forward? You're utilizing almost 90% of your equipment business as well in terms of capacity. So what's the thought process behind investing in future capex?
Yeah, so we are talking about a concept called as asset right model rather than calling it asset light model. So like you rightly pointed out, equipment, we had a lot of equipment and our utilization was in the 50s some years back. Now with the right kind of mix of, disposing of some assets, now our asset utilization is as high as 90%. So we'd like to keep it at that, and therefore will invest in line with that. As far as the capex plan is concerned, across all India, including inorganic, we would like to maintain that momentum of feeding whatever demand comes at us. So and this investment for us will be is in terms of warehousing facility,
right,
to putting machines on for doing that, and both of them we are well placed to do it. I don't want to give a number at this stage because we will go according to asset right model.
Okay, I don't know which other question to ask you, sir, because you're not giving us any numbers. But at least tell us, what is the updated debt in your books? What is the updated debt in your books as of the last year?
Our debt is well under control. In fact, our net debt is about 0.04 or something. Somebody pointed out to me,
okay,
and that's fairly low in terms of that. But if you wanted some number, you have all the numbers already with you. But 20,000 crores top line, 1,500 crores.
Very quickly, sir, will you look at merging Allcargo with Gati?
Very quickly. Those are things that will evolve. Both are listed company. Both of them are in the market.
Okay.
So, and they are different businesses.
Yeah.
So, but there is no option off the table.
Okay.
In this kind of business.
All right. We hope to speak to you soon, and whenever you can give us numbers. Till then, wish you well. All the best to you and your company for this year. Maybe we chat in the next couple of weeks and in fact get some numbers at least going. For the time being, though, we'll slip in a short break. But